Hi, I'm Bill Walker. Have investors lost confidence in American institutions? We all know that U.S. equities have had a very difficult decade. But despite this tough environment, my guests Jim Young and Ashley Misquitta believe that this has presented both challenges and opportunities. Jim Young is lead portfolio manager of the Trimark U.S. Companies Fund and is ably supported by co-manager Ashley Misquitta. Gentlemen, I wanted to congratulate you both on your recent Canadian Investments Award win in the Best U.S. Equity Fund category.
Thank you, Bill. Thank you very much.
Jim, let's start with you. Over the last 3 to 5 years, we've seen a lot of money move into interest or yield-bearing investments due to the volatility in the equity markets and, this search for safety that everyone talks about. Have global economic problems started to recede in your view? And what do you see for future GDP growth within your respective area of the world?
Sure. We have had a number of challenges over the last decade, whether it was the tech collapse that we saw in the beginning of the decade, movement out of that into real estate, the excesses associated with that. We've had a couple of wars, and then we had a financial meltdown in 2008 precipitated by questionable investment instruments. And despite the fact that we've moved beyond all of those, we still have some challenges. Geopolitics, for example, rising government debt. But it is important to keep in mind that this is an opportunity-rich environment. There's tremendous technological change that's going on, which is giving us opportunity to invest in whole new industries. And these are industries that create wealth rapidly. We're also seeing the energy independence develop in the United States, which is very good for the manufacturing sector. So we could imagine a renaissance in the whole manufacturing sector. And there's a plethora of other developments that are occurring. Now we have a recovery in housing, for example, which has been absent for the last 4 or 5 years. So lots happening. The domestic economy is beginning to accelerate. The other regions of the world are beginning to grow more quickly again as well, such as China, which is very good for the export-driven businesses in the United States. So lots going on, a pickup in GDP definitely occurring in the United States at this point.
And Ashley, just picking up on this, it seems like even though GDP growth is improving, a lot of people are still looking for yield. So can you paint a picture for us of why you think a portion of clients' money should be in the U.S. today?
Certainly, there's a number of factors that lead me to conclude that investors really ought to have a portion of their funds in the U.S. Generally speaking, U.S. businesses are actually in pretty good shape. What I mean by that is their balance sheets are at historically strong levels, their margins are at historically strong levels, they're well managed. There's a survivorship dynamic that exists where companies that were poorly run in 08 and 09 either were acquired by better run businesses or their market share was acquired by those better run businesses when they went away. And finally, with the emergence of a middle class and a growing middle class in emerging markets and developing markets, what we've seen is, and what we're going to continue to see, we believe, is that many of these multinational companies are able to access a whole new swath of consumers they weren't able to get to before. So that's going to provide a tailwind. There are secular tailwinds to the economy, that some of which Jim alluded to. So they've existed before, and we've seen the emergence of some new ones with the energy boom and the potential for a manufacturing renaissance and onshoring of jobs, whereas we've seen offshoring historically. As Canadian investors, we have limited opportunities to be able to access really high quality healthcare companies, technology companies, differentiated manufacturers in the Canadian markets. So from a sheer diversification point of view, it makes a lot of sense for Canadian investors to be in the U.S. You touched on yield. I'll end with this, on this note, is that we've seen a flight to the perceived safety of fixed income investments in recent years. Now, I can point you to high quality, dividend-paying businesses in the U.S., companies which produce goods and provide services that we need. These aren't optional, they're not discretionary, we need them. And yet their dividend yields exceed that of the 10-year, and in some cases the 30-year. So when you put these things all together, to me I think it makes a very compelling case that our investors ought to have a portion of their funds in the U.S.
So gentlemen, thank you for sharing your insights today. It was great. Thanks.
Thank you very much. you.